Liquid staking platforms have enabled investors to earn passive income while maintaining full control of their tokens. The two biggest liquid staking pools, Lido and Rocket Pool, have gained significant traction. Their native tokens have increased by 115% and 80%, respectively, year to date. Coinbase is the second largest liquid staking pool. It has quickly gained 17% market share, with its staking service and associated staking token Paves. With the Ethereum's transition to proof of stake, stakers are unable to withdraw their assets until the Shanghai upgrade is implemented in March. Liquid staking tokens provide users with liquidity, enabling them to trade or leverage these tokens to earn yield or access credit. Currently, 42.7% of all ETH staked is participating in liquid staking pools, representing 5.6% of the total supply of the network. Centralized and decentralized staking providers have gained popularity due to their low barrier of entry for everyday users to participate. Alluvial is a consortium of top staking providers that aims to target institutional investors. When withdrawals are enabled, liquid staking tokens should trade at parity to ETH. The case of liquid staking, these platforms have provided investors with a way to earn passive income while maintaining control over their tokens. As the Ethereum network continues to evolve and more blockchains transition to proof-of-stake consensus mechanisms, the liquid staking sector should continue to grow, creating further opportunities for users to earn yield on their assets. Liquid staking has emerged as a popular way for users to earn yield on their assets and maintain control over their tokens. Decentralized staking protocols such as Lido and Rocket Pool have seen significant traction, while Coinbase is quickly gaining market share with its staking service. Liquid staking also enables users to engage in more exotic yield farming and DeFi strategies to maximize their returns. As the Ethereum network continues to evolve and more blockchains transition to proof of stake, the liquid staking sector should continue to grow, creating more opportunities for users to earn yield. David Schwartz, Ripple's chief technology officer and one of the architects of XRP Ledger, recently shared his thoughts on XRP supply. He expressed regret that Ripple did not distribute more tokens when the XRP price was low. He noted that the influx of large numbers of tokens into the market now when the XRP price is already at 40 cents makes things much more difficult. He also pointed out that for US recipients this would be taxed on ordinary income, forcing them to sell around 50% when they receive the tokens. It was previously reported that Ripple ended up with 80% of XRP's $100 billion offering in its accounts. This is currently held in a total of 43.4 billion XRP in Ripple's accounts. This comment provides an overview of the discussion that David Schwartz had about the XRP supply. It explains that Schwartz regrets that Ripple did not distribute more tokens when the XRP price was low, as the influx of large numbers of tokens into the market now makes things much more difficult. Furthermore, it is mentioned that Matt Hamilton explained how Ripple ended up with 80% of XRP's $100 billion offering in its accounts. Cryptocurrencies such as Bitcoin and Ethereum have seen a strong start to 2023. The Bitcoin price has climbed to over $23,000 and Ethereum has followed suit. However, Arthur Hayes, former CEO of BitMEX, has warned that a global financial meltdown may cause the prices of cryptocurrencies to crash. He believes that the Federal Reserve will eventually step in to backstop markets and prevent a complete collapse. This article highlights the potential risks to the crypto market in the coming months. Arthur Hayes, the former CEO of BitMEX, warns that a global financial meltdown could crash the prices of Bitcoin and other cryptocurrencies. He believes that if the Federal Reserve does not follow through with a pivot in interest rates, then markets could see a crash. However, Hayes also expects that the Fed will eventually step in to backstop markets. The Optimism Network token, OP, has seen a 30% increase in price over the past 3 days, reaching an all-time high of $2.50 per token. This rapid takeoff is likely a result of the current global warming of the crypto market. The growing interest and usage of Ethereum's Layer 2 network is also contributing to this rapid takeoff. With a TVL of $635 million, 2.64 million unique addresses, and 70,000 daily users, the project has seen an 85% increase against ETH in January. On Friday, there was a big impulse against both the dollar and the Ethereum network token, indicating positive market interest. With the expected increased usage of Ethereum Layer 2 networks in 2023, the optimistic trend is likely to continue. This is a great example of how a project's fundamentals can translate into a successful token launch. Optimism's impressive TVL, unique addresses, and daily users are a testament to the project's success and have played a large part in driving its growth in the market. David Schwartz, Chief Technology Officer and one of the architects of XRP Ledger, recently discussed cryptocurrency inflation. He also discussed the recent Flare Networks token, Floor, airdrop. He reflected that Ripple should have distributed more tokens when the XRP price was low. This influx of tokens into the market when the XRP price is already at 40 cents makes things difficult, particularly for US recipients who would be taxed on ordinary income and forced to sell around 50% when they receive the tokens. According to Matt Hamilton, Ripple has 43.4 billion XRP in its accounts, which it originally took from the Open Genesis wallet. David Schwartz's comments indicate the importance of releasing tokens into the market at a time when the price is low. This helps to reduce the impact of taxes and other costs associated with the process. Ripple's decision to hold 80% of XRP tokens in their accounts could be seen as a missed opportunity to take advantage of the low price when they were initially released. Bitcoinius had a strong recovery this week, with a rally of nearly 20%. This has encouraged buying in altcoins as well, pushing the total crypto market capitalization over the $1 trillion mark. There is speculation that the current rally could be similar to the 2018 bear market recovery. If the up move continues without major pullbacks, Bitcoin could reach $25,211. Altcoins such as ApeCoin, Decentraland, Avian Fileco and have seen a surge in buying. These altcoins could continue to rise if the bulls remain in control. This article provides a comprehensive overview of the current market sentiment for Bitcoin and select altcoins. It provides a detailed technical analysis of the market and outlines the potential near-term movement of the coins. It is an excellent resource for traders and investors looking to understand the current market trends.